models and different systems. But in the end, guys, I know that all of us as an industry want to help our clients. But as we were having a discussion prior to this call, this is a loan. And one of the things folks need to realize is this is not something you want to just jump into and, you know, with both feet and eyes closed, because it can turn into a loan, and there is that potential to that. As bankers and as Truist, we're trying to protect against that so that hopefully, you know, when this comes due, that it doesn't turn into a loan. It is a forgivable product. And that's kind of what a lot of people have jumped into. So on the what I'm seeing right now on as far as the payroll protection piece and the CARE Act, you know, there's two pieces that happened prior to that being enacted that I saw and that the bank saw. Was they came out with a program that's the EIDL or EDIL loan, I believe is what it's called. And it's programmed directly through SBA. It has nothing to do with the banks. And then they came out with the CARE Act, which actually involved the banks and involved us to be more or less an underwriter and actually critiquing what's being provided and trying to understand what the client's needs are and making sure that matches. So that it's been a huge undertaking from an underwriting perspective. So unbeknownst to what has been announced in the media that the checks were ready that day, that was wrong. And the reality of it is that there's a process to go through with any bank. Now, obviously, some banks are going to move faster than others. Some of that is dictated to by how big their departments are, dictated to how their portal's set up. But I will tell you that all the banking, I'm proud of the industry because all the banking industry has reacted very well to the best that we can in a limited amount of time that we've been given. As far as Truist is concerned, what we did was you would actually enroll in our website, and there was an actual enrollment piece. And when you did that, that puts you on a list. And we have a model that's called FIFO, first in, first out. And so the way we represent that, and that's from here to New Jersey, out to Ohio, and all the states in between. Obviously, we cover a regional size as a bank. And of course, with the merger that just went on between us and SunTrust, you know, that's been an undertaking as well. It's been a good thing because they bring some things to our industry and to our bank that we don't necessarily have, and we bring some items and tools to that as well. So it's been a good move. But with the payroll protection per se, what happens is after you upload or after you get access to the portal, you upload the information that's requested. And after that's done, an underwriter like me, and at the time I wasn't an underwriter till about a week ago, when it came down to this, so you kind of got thrown to the wolves. I was an underwriter as a banker, but not from a technology standpoint. That's where my learning curve has been, because there's a huge mechanism of that in this bank. But as the underwriting goes in, we start looking at that, and then we also, once we complete that underwriting process, we order what they call an SBA number or an E-Tran number. And once we order that E-Tran, there's a second pair of eyes that's looked at it. And once that number has been given by SBA, and the key word to this is given by SBA. The one thing I think a lot of folks think is that the bank kind of controls this. They do to a certain degree, but we also have to follow the procedure of first in, first out. So if a person submitted their application back on 4/4 or 4/5, they're going to be the first one looked at versus a person that's submitting an application on 4/8. It's not that we don't want to, it's the reality of the manpower and the reality of how we have to get the 4/5 ready to go and make sure they got all the documentation that's required by SBA. As far as timing of that, it all depends. It depends on the client. It depends on what they've researched in the U.S. Treasury and what we've provided for them to finish and complete. If those items are not completed, then that slows the process down. And so ultimately, we're all kind of working in the blind because this really was launched, and what was required has been changing very, very quickly, and it's changed throughout the process. Even the application, when it first started, is totally different than what it is today. So, and a lot of that has to do with SBA making changes based on risk, based on they missed a few things they should have put in before. They're not making us go back and redo those applications, but they are making us move forward, putting the correct procedures in place going forward with new applications. And pretty much that kind of gives you an overview with us.
Okay. All right. Thanks. Chuck, would you like to add anything and kind of what FNB is doing at this point?
Sure, because I think our perspective will come maybe from a little smaller institution than Truist, obviously. We're a community-sized bank, and as you stated, we serve Spalding, Henry, and Pike counties. And when we began to receive customer inquiries about the PPP program, about a week before it actually went live on the Friday, the 4th, I believe it was, or 3rd, I think actually was the day it went live, we tried to look at it from the perspective of what we thought was the intention of the legislative bodies as well as U.S. Treasury when this program was conceived, and that was to make it simple and to make it quick. Much to our frustration early on, it was very difficult for us to fulfill the quick piece because there were pieces to the SBA technology that were not working or were not designed to handle the sorts of volumes that obviously came on very quickly as soon as that gateway was open. But that got resolved within about 24 hours. So by Saturday morning on the 4th, we actually were up and running and able to begin the process of submitting applications. And as Brent talked about, started climbing that learning curve with regard to what was the best way to handle these and what was going to be required. The first piece is determining eligibility. This program is designed for employees of less than 500, and then the early participants, it was based upon their corporate structure or their ownership type as far as their eligibility. So you began with trying to determine eligibility. You had to calculate or determine the max loan amount that they would be qualified for, which meant that you had to get certain information, or the borrower had to provide certain information through their application process that then we would be able to verify. And that was the first kind of logjam, I guess, we encountered with the borrowers, is they got no guidance either as with regard to what that documentation might look like. So we had to kind of settle on what we would be looking for as far as a uniform package to be able to verify the borrower information. And much of it relied upon payroll tax records, the federal Form 941, where they submit their quarterly payroll records, became a great tool for us to be able to use to verify some of the information. And then once we had that information to our satisfaction, we went into the E-Trans system and started seeking the approvals. We got our first approvals on that Saturday before noon, and worked throughout that following weekend to continue to submit applications. The way the program is designed, you have 10 days to fund the loan from the time that you receive that SBA approval. So we have been funding loans since last Thursday. We funded our first loans on Thursday afternoon and then began to fund through Friday, and have continued to fund through the course of this week. And we're doing those on a rolling basis, whereas the FIFO system, the first ones that we got approvals on are the first ones we're trying to get documents created for and the funding in place. This is in this COVID environment we're in, where our lobbies are not freely open to lobby traffic. It has required us to get a bit creative with regard to what constitutes a loan closing. In most cases, we are sending the documents out to the borrower electronically, and in cases where it's feasible, we like to get on the phone with them, either FaceTime or just traditional phone call, and walk them through the documents so that they understand exactly the nature of the documents that they're signing and what the expectations will be as we move from the loan phase then towards that application for debt forgiveness, and then into the final phases, which may be some residual loan balance on the back end of the loan. So I guess my overview of this would be, it started out very frustrating for us and very chunky, as you would expect when you try to stand up a program in a very short period of time that constitutes $350 billion worth of money that's going to be pushed through the system. But as we've moved along, it has gotten smoother. The SBA has done a great job of updating their technology, so we're finding less days where we run into system outages or system flakiness as we're trying to work through the system. The next step for us now is how we acknowledge to the SBA that these loans have been funded. That's the next step for the banks, because that's how we get paid in the process, is once we acknowledge to them that we have actually funded the loan, then they begin the process of funding the banks that have done so, and that's where we sit today. So as of this morning, I think we were up to the 10th day of April, applications approved as of the 10th. We were beginning to prepare loan docs for funding on and continuing to move forward in that regard. So that's kind of where we are with it. As I say, started out chunky, but fairly smooth right now.
All right, thanks a lot, Chuck. Good information. And again, everybody, if you have any questions while we're going along, just go ahead and feel free. There's a couple in the chat that we'll get to in a minute. Geni, if you would kind of fill us in on where we're at with Ameris Bank and kind of what you're seeing and your process to getting these loans out to the businesses.
Well, thank you, Gary, for having me again, and thank you to my other panelists who are on with me. One of the things that I wanted to share is that one of the things I experienced is that no matter what institution that you're at, I think a lot of us weren't really prepared for the amount of response that we were going to receive. We kind of have an idea, but it really became transparent being in the branches. And we have been receiving tons and tons of calls, and that's pretty much what it was in the beginning for us. We just had a lot of clients inquiring about, you know, the program and how can they apply. So I believe like 2 Fridays ago, the bill was passed. We started receiving calls that Saturday and Monday. Our website was pretty much up and established for those to be able to apply for the EIDL loan as well as the PPP. And then we started, you know, receiving a lot of the applications. So it was mainly more inquiries in the beginning for us. And by that following Friday, we had over 9,000 applications that we had to process. By the end of that Sunday, we had 17,000, and then it increased by Wednesday to 20,000. So then our executive president really relied on the branches to really help with the process. So my teams have been tasked with really just trying to sort all of the, you know, traffic that we've been receiving. At that point in time, we did not have a place where we were dealing with customer or non. We pretty much accepted applications for both at that time. And we were receiving a lot of inquiries, a lot of applications. And of course, through the changes with the CARE Act, and like Brent was mentioning, a lot of changes came. So we didn't really backtrack what we had in place, but we really just made changes, updated our applications and things of that nature. Unfortunately, they did take the link off the website just to kind of be able to process what we had. And clients were only able to receive the application for the PPP within the branch. So we were only able to supply those that inquired for whoever called, and we just provided them the application. And then of course, by April 14th, yesterday, they've put a stipulation in place that in order for you to be able to apply, you had to have a business account with the bank. So there was a lot of, you know, processes that have been updated. Just with speaking with clients that bank with us and other banks, they might have put restrictions on how much or the minimum or the cap of what they can borrow, or the amount of time that they had to be a customer with the bank. So I think most banks are pretty much trying to just streamline and manage what they have. I would say altogether, the process has been very interesting, but for the most part, we're handling it well. Today, we did get clarity that 53,000 of our customers received their payments today, which we were super excited about. So that's kind of like the first round of payments that had closed within the past few days. And then we have a lot more to go. So I think overall it's a little bit of an overwhelming experience, but I think it's a peace of mind for me to know that we're able to kind of help our small businesses in the community, which is of course a passion of mine. So.
Great, great. Geni, I did have somebody ask about if you had said you received 20,000 applications or 20,000 inquiries.
Applications.
Applications.
So, yes. So I can't even count to you how many phone calls I've received personally, but I'm only guessing, given that we've had a total of 20,000 applications within a week and a half span, it probably was double the amount of calls within the bank. So 20,000 applications were submitted, and I personally saw firsthand the applications coming through and assigning them to our lenders. So pretty substantial amount of applications that came through within our bank. So.
Right.
So Gary, if I can
Yes,
add to that a little bit, because you added something, Chuck did too. So if you don't mind.
Yeah,
So
absolutely.
kind of where we're at Friday, when it opened to that Sunday, we had over 100,000 applications. Within those, and that's within our footprint, within those applications of that payroll program, we have now we're around 50,000 with E-Tran, which I call SBA numbers assigned. So what you hear on the news media sometimes is banks are funding. Banks are funding. We are funding loans. But it's funded through when those documentations are finally presented from our bank, approved by SBA, then the closing happens. So what'll tend to happen is a lot of folks think, hey, this is a quick process. It can be if you were on the initial front side of it. If you're in the middle of it, it's going to slow down some. So just keep in mind, right now we have about $9 billion earmarked as Truist. So I know each bank has a certain amount earmarked. I don't know what the other banks have, but that's pretty much, when I say earmarked, those are ones with SBA loan numbers or E-Tran numbers. Okay. So that doesn't mean they're all funded yet. They will be funded, and it's supposed to reserve amount of money for what we've already got established. And that's one of the reasons why some of the banks slowed down the enrollment process and is starting to slow down the applications. If you all remember, April 10th was when it opened up the door for sole proprietors and independent contractors. And we have accepted enrollment, but we have not started the application looking at this piece at this point, because we're trying to manage the application process that's happened currently and catch up.
All right. Brent, you answered a question in the chat about somebody asking about having to put their net worth on the application. You said you hadn't seen that.
I mean, I don't know. I think they need to be a little bit more clear. What I'm seeing, and I'm doing the worksheets and underwriting these things. So these worksheets have salary, have payroll. The first worksheet that came out, they ask you to put your FICA, include your FICA in, which didn't really make any sense. And that was brought up to SBA. Now they're taking the FICA out of it. So I would definitely say for those that are trying to apply, to go to the SBA website or reach out to your local bank or who you bank with. Because I know, and I won't speak for everybody on the call, but I will speak for Truist. I know what we are doing is, if you're a client, deposit, or loan customer, then ultimately we will work with you on the PPP program. If you are not, we just don't have the manpower to help you. And so, because of how the majority of what's happening right now, and I think most of the industry is going that route. I've had people call me and I said, look, apply as long as you're an SBA lender. If they're SBA approved, go to your local bank because you've got an account there. Because the main thing with having a business account there is so we can put the money in it. Because this is not coming in and pick up a check with us. It's pretty much, once we get you approved and you signed, we will deposit that money through an ACH.
Okay. Geni, they actually said it was with Ameris Bank that they were asking for business net worth and personal net worth. Does that ring a bell with you, or?
What was the question, Gary, about personal and business?
Yeah, it was if they had to give their personal net worth with the loan process application.
Well, it depends on how they're applying. So for our application process, if you're an independent contractor, you know, for sure they will probably, you know, you have to provide any personal income there if you have any. But pretty much the IRS tax returns is required along with that, which should include it. So it just really depends on how they're applying. And I can go into detail with that person if they have any additional questions on that.
Okay.
Gary,
So,
this is
sure, go ahead,
Chuck.
Chuck.
Let me speak to some of the confusion I believe that they have that some people are having with regard to the application process. And that is that because of the fact that the SBA stood this up as quickly as they did, the framework for the application is basically the same framework that they use for their normal SBA 7A loan program. So as the lender is inputting the application as E-Tran, there are a number of questions that they encounter that are not relevant to the PPP program, but were just in the template because it was part of 7A. And as we all went up that learning curve, we had to learn which of those fields were required and which fields you could leave blank and which fields you had to at least enter some data into. And one of those screens is a basically summary balance sheet and income statement for the borrower. We learned pretty early on, though, that is a holdover screen from the 7A and that you can just forward through it without having to input the data. So that may well be what has created some of the confusion with regard to the required information.
Okay. All right.
And if I can add to that,
Sure.
if you don't mind, Chuck and Gary, the one thing I'm seeing, I just saw a question is I thought this was not a loan. This is a bailout or a payroll protection. I think what everybody needs to understand and go into this with not with the assumption it's going to be forgiven. Obviously, the goal is for this debt to be forgiven. However, it is a loan and there is an interest rate of 1% and there is a 2-year payback. So a lot of folks are applying and that could hurt. And there's certain requirements and there's certain things that need to be done. We're doing that on the front side as a banking industry, but also the other piece is you need to realize that in the end, it could come up to where this is not forgiven because we're still unraveling what the requirements on the backside are. We kind of know we're following through our gut, kind of what 75% has to be used for payroll, 25% used for utility and mortgage, and there's going to be an opportunity to bring the client back in or talk to the client and look at that and prove that so that it is forgiven. But I think a lot of people are hearing the word bailout, and I think a lot of people are hearing the word it's going to be forgiven. You do need to walk into this with the eyes open to understand if it's not forgiven, it is a 1% and it is a 2-year payback. So it'll be 6 months where you don't pay, and then that 18 months you'll be paying back. And so that's something that could really hurt a company from a cash flow perspective coming out of this ordeal that we're in at COVID-19. So what I would suggest is definitely be very, very cautious of that and don't go into this thinking that it's actually not a loan.
Okay, great. All right, I've got a couple more questions. After a loan has been approved at the bank, how long is it before the loan is actually funded?
Well, Gary, I'll take that one because the guidance makes it clear that it must be funded within 10 days or the approval may be withdrawn by the SBA. So what we found was that we didn't have a whole lot of direction as to exactly how to fund the loan in the initial few days after we got the approvals. But as I mentioned, we started funding last Thursday, which meant that we got our first approvals on the 4th, which was Saturday. And so roughly 5 calendar days later, we started funding loans. So I would say if you've got an application that you submitted back in the early days of the applications opening up and you've not heard from your institution, it may well be that they've not gotten to the application to actually get a funding approval from the SBA based upon these huge numbers that I'm hearing from my big bank friends on the phone. But from the time they get that approval, it should be funded within 10 days.
Okay. Then let me just follow up with this question, because you kind of answered it already, I think. It says, if I was an early April 4th applicant and I have not heard from my bank since then, since it's been longer than 10 days, what should I do? I guess they should just contact their bank, obviously.
The simple answer on that, yes, is contact the bank. And that's a perfect segue for me to make a statement that I've made over and over these last 2 weeks, and that is, if this event has done anything, I think it has helped business owners, I think, understand that it's not just about having a banking relationship. It is important to have a banker relationship. That individual that you can call when you have a question like that. But I've had an application sitting there since the 4th, and I've heard from no one. So use this as an opportunity to get to know not just your bank, but also your banker.
Okay,
I agree with that. Yep.
I agree with that.
Yeah, I know how that is too. I know my banker personally. Here's one for you, Brent. It says, we've applied with Truist and have had several items rejected or requested to be resubmitted. Will this start our process over when this occurs?
No. Once you're enrolled, you're enrolled. What I would suggest they do is go to the email portal that they've been given, and I would suggest that they go ahead and send, ask the question of, I've submitted this multiple times, because we have had some portal issues where it's underwritten, it's been approved, and I would go ahead and email that person. I would also, and it sounds like to me, if they have a relationship manager, like a lot of my clients know me, so I don't know who that relationship manager is for them, if it's the branch manager or whoever they have a contact with, to pick up the phone and call them, so they can look it up in their portal system and see if they've already been approved. Because what tends to happen with the amount of volume coming in, and as Chuck was talking about, even on the bank side, we had to prop this network piece, we had to prop it up in a matter of 3 days. A lot of our IT guys, and Ameris is probably the same, that in order to do this and provide it fast enough, and then we had to slow how many of the applications. So those that started off in the process, unfortunately, could have been, they're enrolled, but it could be in a segue where it's just repeating itself, in other words. So it's a lot smoother, obviously, now, but to prop a big system like that up in 3 days with no sleep, obviously is a pretty daunting task for IT people. So I would say reach out. And again, Chuck, with what he just said, is correct. I mean, I've had, even though I'm underwriting loans from other states and in different areas, they're not my relationship. My clients call me every day at nighttime. They're like, what is going on? How do I do this? And I look it up and I help them through the process. So definitely that relationship is key and it's very important.
Okay, great.
I definitely agree.
Go ahead, Geni.
No, I was agreeing with Brent, because we have played an instrumental part in pulling all the applications and sorting and assigning them to the lenders. And of course, what I've asked a lot of my clients is just to make sure that they copy me whenever they do submit these applications. And then there's a way that we can go in to see what stage or status of their application is in. So that kind of gives the customer a little bit more of a peace of mind of their application being handled and not kind of just sitting on someone's desk, so to speak. That's what they think in their mind. But, of course, building that relationship and making sure that they have some type of relationship within the branch, somewhere, relationship manager, business bankers, so that they can be able to check in on the status or the stage. And for the most part, a lot of our clients have been very understanding. They're familiar now with how unique this process is going to be. I'm sure, our other panelists can say, hey, we've been having to close loans or make phone calls through the drive-through, whatever the case may be, to try to get this done. But if you set the expectation up first to say, hey, this is going to be a little bit of a unique process, from what you're used to, I think for the most part, they'll have a level of understanding and be a little bit more patient with the process.
Okay. Well, great. One thing I know I did have somebody ask me the other day was about nonprofits. If these loans were available to nonprofit organizations as well.
I can take that, or
Sure.
anybody can. It's up to you guys. Yes, and there was something else that was said on the application in the beginning was not only that, does overseas companies, can they apply as well? So in the beginning, what was happening was if a person owned a business overseas, they weren't really included in the process. The SBA guidance was changed. And part of that reason was they were requiring tax returns up front. And then they started requiring only 941s and 944s and W3s. And so, yes, and we even accept your payroll as far as your QuickBooks or something of that nature to look at. We've got to have something to verify, what you're stating that goes back to that worksheet that you're completing. And I'll make one more note so that everybody can know this. When you're completing that worksheet for whatever bank, if you fill out that block, make sure you fill it all the way across the board and show where you're getting that information from. It makes it easier on the bank to underwrite it and provide and support those documents behind where you're getting it from. It makes it a lot more smoother. What I've seen just in underwriting some of these is the fact they're missing pieces, or they're not uploading documents, or they're not completing where they got it from. If you can make it a little faster for the underwriter or for the banker that's underwriting that piece, instead of coming back to you, it'll help them move your process along.
Okay, great.
Gary, with regard to the question about nonprofits, the guidance is fairly specific that at this point 501c3s are eligible, churches are eligible, and nonprofits who are involved in veterans assistance type programs, and that's under a different subchapter of the nonprofit code that I can't recall off the top of my head. One of the groups that was omitted is groups such as your own Chamber of Commerce, which I think most of those are 501c6s. But I understand that there's a lot of pressure being put on at the legislative level to perhaps either open it up to those organizations under its current form, or try to at least get it included in a round two if there is a round two.
Correct.
Okay, great. Okay, I have another small nonprofit. Their bank is requesting an Excel spreadsheet and IRS Form 941. We can provide the spreadsheet, however, our part-time employees are volunteer and we don't have 941. What do you recommend?
Well, I can take that. I would definitely recommend. Sorry, Chuck. Go ahead. I've talked.
Well, I was just gonna say, if the part-time employee is a volunteer, I'm not sure where the payroll comes in, but I'll let Brent handle that.
I would make it, one of the things, let's be simple about it and we try to use a little common sense approach as documents. So what I would do is put a letter on letterhead explaining that. And I would also explain where you got that payroll from and the software that you're using for that payroll, or how you're supporting that document. So, but I agree with Chuck. If it's part-time, volunteer, I don't know how much they have in payroll as far as that's concerned.
Right. I got a question emailed to me yesterday, actually, and it is actually about a business. They're an independent contractor, 1099 worker, and don't have a business checking account, and paid as an individual. How could a stimulus help me as a 1099 independent contractor? I don't know if there's really any loan programs in that case.
In actuality, the program as it was opened up this past Friday, I guess it was, or Monday, my dates all run together, does address 1099 contractors such as that.
Okay.
Because they're filing some sort of tax document where they're reporting that 1099 income and any expenses associated with that 1099 income. So they can submit that and provide it to their banker. And then again, it's going to depend on whether they also have employees which they pay, or whether they are the sole employee of the entity. So there are a lot of variables in play. But yes, there is some accessibility to the program for those that are 1099 contractors.
Okay, great. And I guess, again, one of the best things to do is just contact your local bank as far as a lot of questions and things like that. Okay, let's see. We don't have any questions outstanding right this minute. Is there anything y'all want to finish up with? Anything looking forward on the future we might be paying attention to? Chuck, let's start with you. How about anything going on that we may look for?
Well, just a couple of things. One is there's a lot of talk about whether there'll be a PPP Part 2. And obviously the legislative bodies were not able to come to any sort of agreement on what that might look like before they broke session in Washington last week. So we really have no idea whether there will be an additional extension of this program or a PPP 2. But that is certainly something that's being discussed. There's a lot of anxiety that the $349 billion will run out fairly soon. We're about 2/3 of the way through that, last numbers I heard. So it's conceivable that there will still be need beyond the remaining money that's in this program. So that is a possibility. The Federal Reserve has announced a Main Street loan program that was just announced a few days ago that we expect to see final guidance on that, most likely over the weekend. They put a 16th date on it, which I will be surprised if we see it during the business day tomorrow. It could, but so certainly by the weekend and Monday, maybe we'll begin to get some clarity on that. It looks very similar to the PPP program with a couple of noted exceptions. One is there's no debt forgiveness associated with it. It is indeed a traditional loan. It is for a little longer term. I believe it's up to 4 years on the term, and the interest rates are in the sub 5%, but I can't remember. Again, final guidance is not on that, so I would not even guess what the final interest rate structures will look at like that. But you will apply through your bank as you would with the PPP program, and then your bank would then coordinate funding through the Federal Reserve Bank in terms of your eligibility. So those are the two things that are probably looming out there, is what comes next after PPP, but like all of this, still very fluid.
Okay, and you kind of answered the question I just had come in. First of all, somebody asked how many applications you've had at FNB, I think, just kind of as a perspective. But also, do y'all as panelists think the money will run out? And I think you kind of answered that a little bit there.
Yeah, I was intrigued listening to my friends with the larger institutions, because those are just mind-boggling volumes that they've had to contend with, which you would expect based upon the large footprints that those institutions have. We have had in-house right now somewhere around 200 or so applications. We have gotten approvals on about 125 of those, and we funded about 60% of those to this point. So I would not even begin to try to compare my balance sheet to Truist, but I'm sure that even compared to Ameris, we're probably less than a tenth their size. So you see our volumes are running a tenth their size as well.
Okay. Geni, how about, what about the money running out? What do y'all foresee when that's going to happen? I assume probably at some point that would happen. I'm sorry, I think you're muted. There you go. Okay, go ahead.
Thank you. It's really hard to say. For the most part, it's just been really communicating with the customers. If this is something that is an immediate need for your business and for yourself, to do it as soon as possible, because as Chuck and Brent mentioned, it's a certain point where our processing time is going to be delayed based on the amount of applications that we're trying to approve. So it's just really making sure that we get all the information, all the documents in, so that they can be in queue to be processed. We do know it's going to run out. It's really hard to say when. I mean, of course, we're learning things every day. Every day I come in, I'm getting a new, update about something else that we need to, take into consideration when it comes to these programs. So it's just really making sure that we communicate that to the customers. And if it is a need, to make sure that they complete all the documents. I think that's been a lot of the run-ins and hiccups that we've been encountering, is just not receiving all the documents on time in order to process their applications in a timely manner. So for the most part, we have been in training every other day as far as this program. And I've just also been advising our customers to keep, to go onto the website, check for any updates. We do have a link on our site, amerisbank.com/SBA relief, that provides us updates daily to our clients of what's going on. So it's just really communicating with the customer, letting them know the expectation up front, so that they can, they can be assisted, for those that really need it.
Okay, great. Brent, what do you think about the money situation?
I mean, at this point, we've been on calls with our other larger institutions, and pretty much Chuck's right. It's going to come to an end. And I think a lot of people there's going to be some at our bank, there's going to be some at other banks that's just not going to end up getting that. However, I will tell you one thing that Truist has done with their current customers is we did do a 90-day deferral program. So we ended up using that to help our clients in a commercial loan perspective to be able to put that 90-day principal and interest on the back of the note. So what that means is that note will come due and it'll have 3 more months on there. However, it helps them to not have a payment with us. We've done the same thing with our mortgage and our credit card piece. Mortgage is a little different. Credit card is the same. And then we also have a program that they're instituting besides of what Chuck had just spoke about through SBA, and we're looking at different types of products and lines of credit for businesses, but it'll be a formal loan process. Obviously, we'll go through the underwriting. And I will say this from an underwriting perspective, and I've had several conversations with credit and kind of what we're looking at from a small business to medium size to large is that, we're taking this segment, guys, of March to May, or probably from February, instead of looking at balance sheets and income statement, we're really going to look at more of the balance sheet of the company versus the income statement. And we're also going to look at, what kind of business are they in, and what's their tenure in that business, which we've always done that, but we're really going to focus more on that and kind of take this segue out. So for those who are looking at applying for loans, going forward, in a commercial world, basically, we're going to be focused more on kind of their experience, kind of what their liquidity is. And we're really going to be focused on taking that little piece out with this COVID-19, because it's not very fair. Everybody's had the same problem. So we've had those conversations. Answer to the $1 million question, is funds going to run out? I mean, it's going to run out eventually, yes. And so that means you got to look at, okay, what are my opportunities? What are my options? And that's where it goes back to what I'll reiterate is it's very, very important that you have a relationship with your banker and your banker understands your business. Because what tends to happen is there's a lot of bankers out there that don't understand that person's business and how it operates and how it cash flows. And that's a huge problem, because in the end, you can't be an advisor, which is what I am, and more of a consultant to the client. It's not necessarily about competition. It's about what's right for the client. And that's why we didn't open up our portal to non-clients to protect them, because we didn't know them. There's some guidelines around that as well, and to get to know them. So I would implore everyone that's on this call to really go back and look, what have you learned from this? And then how can I move forward? How do I build a relationship with my banker? Not just walking in and making a deposit and being a quick fix, because this is how important it is when times like this hit, which, by the way, nobody expected this. I'll say one more thing, and then I've got to go. But one of the things I was at the beginning of the year, we always have an economist come in. And that economist spoke to multiple bankers in Atlanta, and he works for the bank. He's been doing it 30 years. And one of the things he spoke about, which I found very interesting, it was on January 9th. And we're sitting there, and he said, well, first he comes in with 140 bankers in there. Some are commercial bankers, some are corporate bankers. And ultimately he says, well, let me tell you, I've been doing this 30 years, and I want to let you know that number one, I tell bad jokes, and number two, I'm negative. And everybody just kind of looked at each other, oh, this is going to be a great meeting. And so one of the things he talked about in there was there's only two ways to really have this economy downturn. And he said, because he's been looking at the curve and he's got the experience at it, even in election year, everything was going gangbusters. Okay. Number one, he said, how this can turn down is a war. Number two is a catastrophic event. Well, where are we at today? We're at a catastrophic event. So obviously at this point, everybody's just, what I will suggest in that whole setting is that be patient with your bank, whoever it is, be patient with your banker. Understand they're under the gun too, just like you, they want to help you. And I know, Chuck, we talked, you had 200 applications. That's awesome. You helped, 200 people. So that's, and Ameris, the same thing. Our goal is to try to help everyone that we can, because in the end, that's why I'm working nights. That's why I'm working on weekends. Chuck and Geni's doing the same thing. And the reason, because it's very important to us to make sure your business survives. So that's kind of the end result. We want to help. So I thank you for allowing me to get on here and talk to everybody. And I thank my teammates and other bankers that are on here as well. So if you need anything, you can reach me. Gary's got my number. Be more than happy to try to help you or direct you in the right location. So thank you all for your time.
Thanks, Brent. I appreciate it. So Chuck or Geni, I do have one question. Somebody was asking about requirements for forgiveness. I think we kind of touched on that a little bit. What exactly does a business have to do to get forgiveness of this loan?
The precise documentation has not been really identified at this point, and it may vary from institution to institution, but essentially it is actual monies expended over the 8 weeks immediately following funding of the loan for payroll and payroll-related expenses such as employer-provided health insurance, retirement benefits, or other traditional employee benefits, utilities, rent, and or interest on any mortgage debt associated with the business's facility. So it's important that they keep very precise records once this loan funds for those items that they spend that money on, because they will be asked to provide that to their lender as they complete that debt forgiveness grant application that will go to the SBA. Hopefully the SBA may come out with some more precise guidance on exactly what documents they want to see between now and, say, roughly the 75 days or so before that kicks in. But as of right now, I would highly encourage people to keep very precise and detailed records on those items over those next 8 weeks after they receive funding. Okay,
great. And we just got a couple minutes left, but I think this is an important question. Can they use the loan to pay 1099 subcontractors? Geni, I think you're muted again. Okay, go ahead.
You keep muting me, Gary. Well, that's pretty much what the loan is for. Pretty much for them to be able to, pay their contractors and their employees. So those funds are able to be used for that. And I would definitely mirror Chuck with, that documentation. We have been really advising our clients, if you haven't been the best record keeper, now is really the time to do that, because if they are seeking forgiveness or any assistance future on, that will be one of the things that we will be requesting, those type of documentation. So those funds will give them the ability to pretty much expenditures, be able to pay their employees and their contractors as well.
Okay, great. And I guess like I said, we're about out of time, so we'll finish with this. If you qualify for the loan, when would your payment start after you receive the money? I think that was 6 months, is that correct?
That is correct. It's a six-month deferral of any payment from the date the loan funds, and then the principal and interest payments begin on the 6 month following.
Okay, great. Well, I tell you what, we're going to end it here, and if I get any other questions in after this, people can email them to me, and I'll be glad to forward them on, find out answers for you. But thank y'all so much for joining us. Some great information in this webinar. I think a lot of things that people were looking for. So again, thank you for taking your time. I know y'all don't have a lot of time right now, so I appreciate you taking some time to do this with us. And if y'all need anything from the chamber, thank you so much. This is being recorded, so we will have this available. If you know somebody that needs it, needs some information, we'll have it up on our resource page, together4henry.com. So it'll be out there for people to view as well. Thank you again for joining us, Chuck, Geni. Thanks, Brent. We had to go already. And y'all have a great day.
Thank you. Thank you, everybody.
Thank you.
All right.